Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the M1 Finance app. Last time in our previous video, we had gone over creating an account on M1 Finance. We talked about the 6 benefits of signing up on there and creating your account. Number one, it was commission free, very similar to Robinhood, so you don't have to worry about paying commissions. They were no longer any fees on the account, so everything that you made inside there, no matter month to month, there was no fee coming out of your account. They also allowed partial shares. So if you had $50 to invest, if you had $26.50 to invest, if you had $2.50 to invest, that would be able to be deposited into the account and automatically allocated towards your investments that you wanted to choose in there. And you could decide to invest, 5 to 100, one between 1% and 100% in your pie-like portfolio. And also, they offered retirement accounts, so you could create your very own self-managed IRA or Roth IRA, or you can create a single employment plan. I believe SEP. I'm not sure if that's the abbreviation for it. So if you're like a self-employed, self-employed plan. So it's out there for those users. So let's go ahead and get started. So the video will be covering the M1 Finance app, choosing the investment account that's right for you, and then begin funding the account. As you know, I've wanted to create a account for my wife. I had been looking at Vanguard, Fidelity, TD Ameritrade, Merrill Edge, and you could always create an account down there, add some funds, and begin buying ETFs that were commission free. But a lot of times they would only offer specific like iShares. If you sign up on Vanguard, you could buy Vanguard ones. If you sign up on Fidelity, they would offer a couple different range of ones, but you would have to, in a sense, you have to buy an ETF, which has an expense ratio coming out of it. I looked for quite a while. I'm glad I kind of continue to look to find the best one. And M1 Finance recently removed all of their fees. They offered everything that I was looking for. The commission free, no fees. They offered a retirement account. So I feel that this is one of the best options out there for brand new investors investing with whatever kind of money that they have available at the current time. Whether they're investing only 5%, 10%, 15% of their net income, it's very important that you can begin investing with anything, and this is a great platform for that. So you do have 4 options when starting to select your account. You have your individual investing account, which is just your cash managed account. This is for just an individual. You have your joint investing, so you and your spouse can open up a joint investing account and begin investing together towards different kinds of funds. You can buy your stocks, your ETFs, your bonds and such. So you can do quite a bit in there. You can also open up retirement accounts. So I have selected here a retirement account. This is traditional IRA or a Roth IRA or a self-employed plan for an IRA, which is similar to a 401k, or you can roll over an existing 401k here. And then they have the other account types. So if you would like to create a brokerage account for your trust, your LLC, corporations, or partnerships, you can begin going that route inside this application as well. So I decided, you know what, I'm going to go ahead and start her a retirement account. So now I select a retirement account. What kind of retirement account do I want to create? We have a traditional IRA, which is the tax deferred account. So if you invest $5,500 in this account, you can deduct $5,500. It's your adjusted taxable income can be managed, deferred down by $5,500 that year. So you don't pay taxes on that money that you deposited into your IRA this year, but in the future when you begin to withdraw the contribution or the capital gains, the dividends and such after 59.5 or prior, you will get taxed. If you pull out your money prior to 59.5, you will get hit with a 10% penalty, and then you will get taxed on top of that. The Roth IRA, this is after tax money, meaning that anything that you have net income, money after taxes that's going into this account, you can always withdraw it prior to 59.5. You can always withdraw your original contributions, and all your capital gains, your dividends, your interest that you leave in this account after 59.5 then becomes tax sheltered, or you don't have to pay taxes on it if it's sat within this account for at least 5 years. That means if you made your account at 55 and you're 59 and a half, you have to wait until you're 60, 61, because you have to have let it sit in the account for 5 years, and then it would be completely tax deferred, meaning you don't have to pay taxes on the capital gains, dividends, or the interest. Then you have your simplified employee pension. That's what it's called. I did not know the name. So SEP, I thought it was like the single self-employed plan or something like that. But this is just if you're out there, you're self-employed, and you want to create some sort of retirement account, you must have some sort of a business that you receive at least $600 in compensation from an employee. If you create your own business out there and you create an SEP account, SEP, you have need to at least make some money from your business and such. And then you can also roll over a 401k plan from a previous employer, and that's something I'm going to be talking about in the future. I am considering rolling over my 401k from my old employer because after talking with a financial advisor over at Merrill Edge, we had talked a little bit about vested amount and uninvested amounts, and that's something in another video. So in this example, I wanted to create my wife a Roth IRA. I want to tax shelter all the capital gains, all the dividends, and all the interest until she's 59 and a half. And if for whatever reason we do need to withdraw money out of the Roth IRA, we can do that without receiving any penalties because we can always withdraw our contributions. So we're looking at getting into real estate here in the future. So I believe that the Roth IRA is a great choice for that. Next, you're going to have to fill out your contact information. So you fill out your first name, your middle name, your last name and such. You have your address, your city, your state, your postal, and your phone number. And then once you've done that, you hit continue. What's next? Next, you begin to fund your portfolio. So you have to add your bank in here. You have different options inside of here. Her name is Verena, and we've created her Roth IRA account. So we now have to add a bank, and this is the overview. So we select on add bank. We can now begin to add and connect our bank into the account. So you have a list of basic options here. So you have your Chase and your USAA and Fidelity here, or you can just search for your bank in the area here. Once you've done that, or you can connect if you're connected to a credit union. I looked up the credit union and that I'm near, and it didn't have it here as a listed bank or credit union. So you could also do that here through the bank account number and routing number. For this example, we're going to be using Chase. So we entered our Chase username and password. It authorized with the servers of the M1 Finance, and then the account has been successfully linked over to the M1 Finance app. So here it says that we're almost done. We can begin to select which account you would like to connect to the M1 Finance. So we had a few options here. We have our checking and a few savings account there. So we just selected the checking account, hit connect. And the maximum contributions to all IRAs, individual retirement accounts for 2018 is $5,500. So there are some income limitations on contributions. For more information, you can click here. And then I decided, this is my wife's first retirement account outside of her 401k or Roth 401k. So we're going to go ahead and deposit the full $5,500 and starting in January. I believe that this is one of the best options if you have the funds available to do this, because this means that you're putting $5,500 into the account. You don't have to have it 100% invested in the account at that time, but at least you have that money there. That way you're not going to be using it elsewhere, such as for shopping or whatnot, or you're paying yourself first at the beginning of the year. You're cutting yourself a check and you're putting it into your account. So contributions are going towards this year 2018, and you hit continue, and then it moves over deposit to M1. Does everything look okay? We're transferring from our checking account to the Roth IRA of the amount of $5,500. Deposits are invested during M1's next trading window beginning at 9 a.m. Central Standard Time, Monday through Friday. And then you just hit confirm. Once you've done that, you'll see that your account is connected here. So this is one of the very first brokers that I've seen that show, okay, where we have the Chase Bank here. It's going to show you the M1 account balance, which it's still in the process of transferring. You're actually going to see your bank balance here, so you can actually see how much more you can either contribute. I can't contribute anymore to the Roth IRA. And you can actually see how your bank's value has been over time while it's connected to the M1 Finance. So it's very similar to, say, Mint. Mint allows you to connect your banks on there, check your, you can create a budget plan, which is nice. So you can see the progression of your savings or checking and such. We can also take a look at recent transfers. So here we can see that we initiated the transfer on January 6th. It's currently pending. We can click the details. The checking account is transferred over to the Roth IRA of the amount $5,500. There's a few other things on here. This is all underneath the overview. If you flip over to the schedules, if you would like, if you're not going to be investing the full amount of $5,500, you can invest anything you want, $25, $50, $100, anything you would like. I did an example in another video of why companies pay dividends. If you had invested $1,000 into AT&T back in 2015 and had left it there just for 3 years, you would have made 50% on your investment. Even though AT&T did not move very up and down very much, you would have got paid. You would have been paid dividends. You would have been paid capital gains, and in those 3 years, you would have made over 50% in your original contributions there. So, any amount is a good amount. There's never a day too late to start investing. You should begin investing either today or yesterday, as in what it should be. So you can set up your own scheduled deposit and select days of when you would like that to have deposited. And then if you do want to schedule deposit, you can put in the amount, how often you'd like it to happen. So you can set up repeat weekly. So you can do, if you want to invest $500 into an account every month, break it up into weekly segments so that you can begin investing $150. Let's see, what's 5 by 4? I can't do that math right now. It's like 2.5 by 1 is 1.25. So you invest $125 every week, and then you would just kind of add that to your portfolio. That way it's averaging in, because if you invest everything 100%, I did that with one of my stocks I invested recently in Edison International, the full amount that I was planning on investing. And that really bit me because that stock fell down more than 10%. Whereas if I had invested half the amount I had planned, waited 3 to 5 days or like a week, the stock would have fallen, and I would have been able to reinvest a little bit more. If the stock would have fallen some more, I could have reinvested more, and that would have averaged down my position. So that was one of the mistakes that I normally do. I normally invest $1,500 first into any stock and then kind of add a little bit more and more, just as a minimum. So that is basically it here. Once you, let's see here. So that is the schedule. If you go over to the account transfers, you can actually transfer an IRA to the M1 Finance app. So if you would like to transfer, you can just send them an email to the transfers@m1finance.com, and their team will handle your transfer. But you have to be sure to include any special instructions. Please note, we will liquidate any unsupported securities upon receipt. And then if you'd like for them to assist you more, you can always contact them. And then if you do want to roll over, say, a 401k, which is something I'm taking a look at, you would then click on rollover 401k. Here you would get the options of one of the transfer specialists who will contact you through the process. So you can leave them your contact number and the best time to reach you, so you can select morning, afternoon, or evening. And then it kind of goes over the self-service. So in order for them to roll over the current 401k to your M1 Finance, you will need to contact your current 401k administrator. Because of regulations, we cannot do this for you. Follow the instructions below to have seamless transition. So on my 401k plan, I would need to talk with Merrill Lynch because that's where it's currently being held from my past employer. So I would contact them if I wanted to roll it over to the M1 Finance. So that is basically it for this video. So that's the end of the whole PowerPoint slide, or the chalkboard slide there of funding. First going through your account process. So if you were to decide on an account, do you want to get taxed right now? So you can create your own investing, your individual investing or your joint investing, and get your dividends right now, get your capital gains this year, worry about paying your taxes right now, Or do you want to create a retirement account where you can kind of either defer your income? Say you're in a 25% tax bracket, 22% tax bracket, you're getting taxed on those capital gains, you're getting taxed on those dividends. You want to lower yourself maybe into another tax bracket, so you're contributing to your 401k, you're contributing to your IRA in order to defer income and adjust your income into a lower tax bracket. Or do you want to tax shelter your current dividends, your capital gains? Because right now you may be just sitting in a 10-15% tax bracket, 12% tax bracket now going into 2018. And as long as you're sitting in that 12% tax bracket, you're not going to get taxed on those dividends. You're not going to get taxed on the capital gains, because as long as you're holding it for the long term, you're going to get that long-term capital capital gains, which then gets taxed at a much lower tax bracket than instead of your original tax bracket. So that is basically it. I will let you guys decide what is the best account type for you guys to begin investing, and then of course we've already covered how to fund your account. You just basically link up your account, choose the account, add how much you'd like to invest, contributions. Then once you've actually contributed a little bit, it doesn't have to be the full amount, you can set up your own schedule here. So you can go over to your schedules, schedule deposit, just put $2,500, 15% of whatever your net income is. So if you get paid $1,000, put $150 away for yourself every month. Split that up by 4. So 150 by 4 is 70. What's half of 75? 37.5. So $37.50 every week. That doesn't seem like much. You know, if you go out to eat every single day, you're already spending more than 38 bucks. You know, if you go out for a meal on a Friday, that's 40 bucks right there you're probably spending. That could be better investing towards your future. So that is it for this video. If you did find it informative and educational, go ahead and hit the like button below. If you are brand new to my channel or a recurring viewer, go ahead and hit the subscribe button on the bottom right hand side. Just click it, subscribe to my channel. It's 100% free. I'm out here putting out information to benefit, you know, everyone out there that's willing to watch, and I hope you do enjoy it. If you have watched up to this point, I would like to thank you guys out there. Hit the like button below. Please remember to subscribe for future financial videos. If you have any questions about anything that was covered, or you would like to see something covered within the M1 Finance app, Robinhood, Merrill Edge, those are all 3 platforms that I currently use, and also Stash. I will be funding some Stash as well and begin using that platform. So if you have any questions on anything, or just any questions in general in either investing or finance, go ahead and leave that in the comments below. Thank you for tuning in, and I will see you next time. Have a great day. Bye-bye.